This is an update on Bitcoin and Ethereum cryptocurrency here in the daily interval, each kind of representing the day. And I had mentioned right in my previous video that we had this minor primary uptrend line here off the July reactionary lows, and we actually did put put in a 3 outside down bearish continuation pattern, followed by now a 3 black crow bearish continuation pattern. And I had mentioned that bull traders, dip buyers, long traders wanted to see a continuation of this uptrend here. And again, short sellers and any aggressive short traders would want to see a complete break of this uptrend line and a back test up amongst this bottom of the trend line there, offering an aggressive objective short trade entry. And that's exactly what happened as soon as it snapped there. And thus far, that was good for a 18% crash. We have the 50-day moving average hugging right underneath that primary downtrend line here off the April reactionary highs, coinciding with the key 236 Fibs retracement. And we are at a massive key inflection point now. Dip buyers, bull traders that want to step in right here, right now, set some stops below, depending on how risk tolerance you are and the risk reward. And you want to see, they want to see a gain of momentum here. They want to see the MACD start to churn to the upside and protect that zero line at all cost, and really start to have some of this RSI momentum weighing towards the upside. That's what they want to see. Short traders, they want to see a solid break below this primary downtrend line. Big support here. Again, coinciding with the 50-day moving average and the 236 Fibs retracement. That is a triple line of support there. And if breached, I believe a quick turn to the downside could be definitely in the cards, especially if we start to breach and break down below this key trading range here. And this is a big level here, in my opinion. This is your zone here, and that 1016.66 needs to be defended at all cost. If not, that's where you could start to see a huge wave of margin calls and the forced liquidations start to occur there. We'll zoom in here in the 240-minute interval, each kind of representing 4 hours here. And again, matches up perfectly here on the 4-hour interval. That 1521.43 coinciding with the 236 Fibs retracement. Really here from top to bottom off the April reactionary highs and June reactionary lows. And again, just such a massive key inflection point, in my opinion. We put in a divergent high, double divergent high, with a negative and or bearish divergence is really constructed on 3 of the momentum indicators here in the RSI and MACD. And we already had a breakdown below the zero lines on both the oscillator and the MACD here. So we'll see what happens. Definitely could have a potential counter trend rally, and maybe see a little breach to the upside, and maybe back test and have a false breakout amongst that 1682.23 price resistance. And that level will be tested, and it needs to be defended at all cost. Move out here into Bitcoin cryptocurrency here in the daily interval, each candle representing day. We had that 3 black crow continuation pattern, bearish continuation pattern that I had mentioned way back in June there, and we have been stair-stepping a little bit higher, but starting to wane some of that momentum, putting in 3 bearish continuation patterns and 2 doji stars, followed by a 3 black crow continuation pattern and snap. Call it a false breakout. We had that key momentum just starting to wane now, where you had that primary down trend line coinciding with this minor uptrend line breached, and here we are. And especially if you've been following my charts, I had that key 820.802 price support there. That's where dip buyers, bull traders, if you want to set any limit orders there. And thus far, really for a 2-day trade, has been good for a little 4% scalp there. So, and here we are at a key inflection point for Bitcoin as well. Right off the June reactionary lows here, we have this primary uptrend line that is being back tested right now. We have a ton of resistance up above, coinciding with that back trend of that trend line, the 50-day moving average, and the primary downtrend line here off the April reactionary highs. So call it a triple, quadruple line of resistance. And this is what short traders want to see, a continuation of this downtrend here. So, which will start to turn, and probably the last set of positioning to defend at all cost is, again, I've been harping how imperative this 18,966 level is right here. And again, if that gets taken out, coinciding with that primary downtrend line, I think that's it right there. That will spell for a potential multi-year bear market in cryptocurrency. And here is the big picture here, right off the 2013 reactionary highs and lows through really almost a full decade of reaction there. And if that's breached, that's going to be a huge change of momentum at all costs there. And you have negative and or bearish divergences really constructing on all three indicators going back here since 2021 of September. And they usually have the larger, the bigger the negative divergences that occur, the larger the drop.